mess it up. Jarisati? Jarisati?
Jerisati.
Jarisati.
So
That's
very,
close.
very.
There we go. I didn't mess it up.
It's not easy at all.
It's not. Got you.
It's here. That one's hard too.
Yours is an easy.
Hitler Gaudet?
Hitler Gaudet.
Yeah,
Okay.
you got it. Congressman, are you a Gamecock or?
In my district, it is
Yeah.
wise to not take sides.
Gotcha. Okay. Smart. Yeah.
Well, good afternoon, and thank you all for joining us today for this roundtable on how cryptocurrencies are being used by people living under repressive regimes around the world. Today's roundtable is a little different from the typical congressional hearing. This will be more of an informal conversation. We will not keep time, and I will not be recognizing members in any formal order as we would during a standard hearing. Instead, we will hear from our participants as they introduce themselves and offer some brief opening remarks. During the remarks, members may engage and ask questions, much like during a briefing, but in a free-form style. While I don't expect to be an issue, I will do my best to ensure all members have the opportunity to ask whatever questions they may have. Of course, members may follow up separately with any of today's participants if there are additional questions not addressed during the discussion. I'm now pleased to introduce this afternoon's roundtable of participants. Mr. Dustin Palmer is the Bank Secrecy Act Officer at Anchorage Digital Bank, the first federally chartered crypto bank in the U.S., and one of the leading U.S. institutions providing secure digital asset custody and infrastructure for regulated markets. Mr. Palmer's experience allows him to speak knowledgeably about how democratic governments can support safe, transparent, and digital financial systems. Next, we have Mr. Jorge Charazati. He is the president of the Economic Inclusion Group, where he leads global research on how individuals living in authoritarian countries use digital tools to access financial freedom. Mr. Charazati, his work has examined the conditions under which people turn to cryptocurrency when their governments restrict banking access or weaponize currency controls. Next, we have Mr. Cody Carbone. He serves as the Chief Executive Officer of the Digital Chamber, one of the most active voices in shaping the policy and landscape for blockchain innovation and responsible digital asset regulation. Mr. Carbone's expertise will allow us to understand how U.S. policy choices affect both global democracy and American national security. Lastly, we have Mr. Dylan Hetler Gaudet, who serves as the Acting Vice President of Policy and Government Affairs for the Project on Government Oversight, where he works on a wide range of issues from congressional capacity and federal spending issues. Gentlemen, thank you all for being with us here today. As we consider today's topics, I want to underscore the importance of understanding how decentralized digital assets empower those who live under authoritarian regimes that suppress basic freedoms. I've often said that Bitcoin and decentralized technologies represent a profound challenge to authoritarian control. As I've noted, when a regime can no longer control its citizens' access to information or money, what do you have left? And that is why I have described cryptocurrency as potentially the beginning of the end of all authoritarian governments. For millions of people living under repressive rule, the ability to store value, send money, or receive support from abroad without government interference can be life-saving. It can also be an essential tool for dissidents, journalists, and activists who risk everything to get the truth out. In addition to the human rights implications, it is also critical that the United States maintain leadership in the development and regulation of digital assets. If we do not lead, others will. The Chinese Communist Party has made clear that it intends to shape global standards around state-controlled digital currency, surveillance-based financial systems, and cross-border payment architectures that advance Beijing's geopolitical aims. Ensuring that democratic nations, not repressive regimes, set the norms for digital finance is essential to both our national security and the protection of individual liberty around the world. Again, I look forward to hearing from our panelists here today about, one, how these technologies are being used on the ground, two, where U.S. policy is helping or hindering that progress, and lastly, what Congress can do to strengthen both global freedom and American security. Before I ask the participants to briefly introduce themselves, I want to turn to my ranking member, who is not here, but he will make remarks when he does arrive. And with that, let's start. Mr. Palmer, lead the way.
All right. Thank you, Chairman Timon. And thank you for having me here as a witness today. Okay. My name is Dustin Palmer, and I'm the Bank Secrecy Act Officer at Anchorage Digital Bank. I'm honored to be here today to talk about how regulated digital asset infrastructure supports American national security, extends U.S. dollar dominance, and serves as a tool for financial freedom for people living under authoritarian regimes. I joined Anchorage Digital Bank in 2023. I have also served as a senior advisor to the General Counsel at the U.S. Department of Treasury, where I was intimately involved with anti-money laundering, countering the financing of terrorism, and economic sanctions, and anti-corruption, and I also served as an attorney in the Department of Homeland Security. Before joining Anchorage, I spent years in the private sector advising major financial institutions, traditional financial institutions, on financial crimes compliance. That experience, tracking criminal money while I worked for the federal government, and then helping the world's largest banks build programs to identify money laundering and report it, is what brought me to Anchorage Digital Bank, and to help build what I believe is the most rigorous federally supervised digital asset compliance infrastructure in the United States. Anchorage Digital was founded in 2017 by security engineers who identified a fundamental problem. Institutions had no safe, regulated place to custody digital assets. They built the solution and created the foundation for the first federally chartered digital asset bank in the United States, Anchorage Digital Bank. Our clients are institutions, banks, sovereign wealth funds, venture capital and private equity firms, crypto protocols, and governments. We hold tens of billions in digital assets in custody, and we are the first federally regulated stablecoin issuer in the United States, having issued dollar-pegged stablecoins for Tether's U.S. entity, Western Union, Athena Labs, OSL, and Falcon Finance. The strongest national security posture comes from onshore stablecoin issuance, visibility, and free market propagation. Anchorage Digital is at the center of all of them. Onshoring stablecoin issuance through Anchorage Digital enables sanctions compliance, law enforcement coordination, and real-time oversight that simply does not exist offshore. Extending USD-pegged stablecoins throughout the world is self-propagating. The Genius Act provides regulatory clarity. The free market, where allowed to flourish, is already choosing USD-pegged stablecoins. And quite frankly, a nudge from the US government and international businesses will help extend their adoption by promoting stablecoin infrastructure and establishing interoperability standards that favor open systems over China's ECNY system. The and underbanked population are also ready to adopt this easy and cheap way of transacting. The United States has a historic opportunity to set the standard for how this technology is built and governed, and Anchorage Digital is proof that it can be done right. Every dollar that flows through our bank is a dollar that the US government can see and hold to account. We are ready to help this subcommittee build on what we have already started. Thank you again for the opportunity to testify. I look forward to answering your questions, but before I do so, I also have, or at any time, I also have a demo, because I want to demonstrate how people actually use this.
Let's do the demo. I'm going to let us do
perfect.
quick opening remarks, and then we'll do the demo.
Sounds good.
Thank you, Mr. Palmer. Mr. Jarasati?
Thank you very much, Chairman Timmons. I appreciate this discussion. I appreciate the invitation for you and all members of the subcommittee, because this is a really important issue for us. Following your remarks, I will introduce myself. My name is Jorge. I'm from Venezuela, and my entire life I have been working to bring back rule of law, economic freedom, and democracy to Venezuela. And when trying to understand this process, I really understood that financial access is at the core of democratic progress, is at the core of what a free society really means. Why? Because if you don't have financial tools, if you don't have access to digital assets or bank accounts or any sort of financial instrument, you cannot be part of society, especially in today's world. And I started working on this because I realized that it's an extremely underreported issue, but globally, most people have extreme levels of financial repression. If you are somebody born in New York or in Washington, I'm pretty sure you don't know many people without a bank account. But if you are somebody from a country like mine, Venezuela, most of our citizens, business people, think tank leaders, NGOs don't have bank accounts, and for many years have been experiencing severe levels of financial repression. If it's not for the creation of digital assets, stablecoin, and Bitcoin, hundreds of millions of people around the world will not be able to sustain their families right now. That's the value of digital assets. In Venezuela, again, all of our civil society is unbanked because of the levels of repression. In Venezuela, we have been experiencing financial repression since the early 2000s. Since 2003, we have been experiencing exchange controls, in which the government had the monopoly and the arbitrary monopoly of giving people access to dollars. Since 2013, we have been experiencing the highest inflation rate of any country in the world. And since 2017, we have been experiencing hyperinflation, meaning that our inflation rate has been over 50% per month. We mark 4 years of hyperinflation, making us the longest hyperinflation period of any country without war. And this is happening not because of a war, it's happening because of bad public finances and mismanagement of our economy. This context really collapsed the finances of our people, from their ability to transact to their lifetime savings. All of it was gone. Our poverty rate in 2012, for example, was roughly 29%. Then went up to 81% in 2024. Extreme poverty rose from 8% to 50% in the same period. And this despite the fact that during the Chavez administration, we received $1 trillion in oil revenues and $200 billion in foreign debt. All this money was laundered, all this money gone from our economy. As a result of these desperate measures, these desperate conditions, people start using, first of all, dollars. So the economy became de facto dollarized in Venezuela. People just forgot to use bolivars. And at the beginning, they were using cash. But then they realized that they could use digital assets. They could use stable coins. They could use Bitcoin. To the point that right now, over 60% of people in Venezuela use digital assets for their transactions. And this is despite the fact that the Venezuelan government, to this day, continues to block the full adoption of digital assets in Venezuela by imposing more financial controls at the point of retail purchase. On top of these economic damages in places like mine, you need to always remember that internationally, 75% of people live in authoritarian regimes. That means that over 6 billion people live in financial systems where their financial system can be weaponized against them for political control, for censorship, to silence them. And this number of 75% comes from the Human Rights Foundation. In all these places, your accounts can be frozen at any minute. They can be frozen for no explanation. In all these places, these regimes, they say that a nonprofit or an activist or a business person, they blame them of money laundering charges, and what happens is that they are able to block their account. At the same time, their financial privacy is also weaponized in order to understand who are their suppliers, who are their donors, etc. So many nonprofits who receive money from the US end up being in prison in authoritarian countries. To finish my remarks, I have 3 recommendations. So first of all, the US State Department should integrate and systematize the use of Bitcoin peer-to-peer strategies in their effort to support civil society in places like Venezuela, because the banking system is not arriving to places like my country. The second one, the US Treasury should improve its guidance to financial institutions when it comes to clearly reduce the compliance uncertainties, enabling American foundations to have lower compliance costs when supporting a nonprofit or civil society in general in authoritarian places. And the third, both the State Department and the Treasury, they should create a fusion cell in which they include the element of national financial security to its foreign policy doctrine, because they need to include and promote the defense of people's financial freedom and financial inclusion, which is really part of people's overall democratic freedoms. Thank you.
Thank you for that. Mr. Carbone?
Chairman Timmons, thank you for the opportunity to be here today. My name is Cody Carbone, Chief Executive Officer of the Digital Chamber, the world's largest digital asset and blockchain trade association. Our members span more than 250 companies, from the world's largest exchanges and banks to startups, innovators, builders, and developers. I'm here as a representative of the blockchain technology and digital asset industry as a whole, not on behalf of any single company. The Digital Chamber stands ready to help every member of this subcommittee and beyond work through these issues. The title of today's roundtable gets it exactly right. There are 2 sides to this coin, and we shouldn't pretend otherwise. The same technology that helps a dissident protect her savings can be misused by a regime trying to evade our sanctions. Any honest conversation about digital assets must hold both of those truths at once. And the good news is that with the right policy, the United States does not have to choose between them. Let me start with the side that gets too little attention. When a government weaponizes the financial system, freezing accounts, surveilling transactions, debasing the currency, it is the most vulnerable people who pay first. In Afghanistan, women cut off from the banking system use crypto wallets to move their own money, and in some cases to get their families out. In Venezuela and Syria, where the local currency has collapsed, people turn to dollar-backed stablecoins simply to preserve what they have already earned. In Kenya, families are using these tools every day for remittances and small business payments. For these individuals, this is not speculation. It is financial survival, and very often, it is access to the US dollar when their own institutions have failed them. Now, to the other side. Yes, adversaries, including Iran, North Korea, China, and Russia, have attempted to use digital assets to move value and evade sanctions. We should not minimize that threat, but we should also be precise about the nature of the threat. Bad actors have always looked for ways to move money outside the reach of law enforcement, including through cash, shell companies, and traditional financial intermediaries. The difference here is that digital assets often operate on public blockchains, where transactions are permanently recorded and traceable, where American law enforcement can reach into Iranian wallets and freeze assets from afar. That creates a very different enforcement environment to our benefit. Used wisely, this technology is not a blind spot for our national security agencies. It can be one of their sharpest tools. That brings me to the stakes for the United States. Our adversaries are relentless, and they are building closed, state-controlled digital currencies designed for surveillance and control. We here have a better model. Open networks and a dollar that can travel anywhere where there's a smartphone. Every person abroad who chooses a dollar-backed stablecoin is choosing American money over an authoritarian alternative. That is a strategic advantage worth protecting, but only if we lead. That means finishing the work of clear, sensible rules here at home, keeping our tools to combat illicit finance sharp, and coordinating with allies abroad so bad actors have nowhere to hide, while honest users and American businesses remain free to build. The Digital Chamber and our members stand ready to be a resource to this subcommittee as that work continues. Thank you again, Chairman Timmons, and I look forward to any questions.
Thank you, Mr. Carbone. Mr. Hetler-Gaudette, please.
Thank you, Mr. Thank you, Mr. Chairman. I want to thank you and the ranking member for inviting me here today to speak with you, and also for holding these roundtables. I think these are an excellent middle ground between hearings and briefings. Facilitating robust collegial discussion, I think, is a really important function. So I appreciate you all doing that and allowing me to be a part of it. Just as some housekeeping, for those of you who are unaware, I am not wearing dark sunglasses as a ridiculous fashion statement. I am blind, so just want to make sure everyone knows that. My name is Dylan Hetler-Gaudette, and I'm the Acting Vice President of Policy and Government Affairs at the Project on Government Oversight, or POGO. We are a good government, nonpartisan watchdog group that has been around for 45 years, and our entire mission is to root out waste, fraud, abuse, and corruption from the federal government. The last word there I want to emphasize a little bit, corruption. Why am I here today talking about this particular issue? My role here is not to be an evangelist or a naysayer on crypto or, broadly speaking, digital assets. I think they have quite a large potential and potency that they can deliver for people domestically and abroad, as my colleagues on this panel have already outlined here today. But what they also possess is a potent ability to provide new opportunities for corruption, cronyism, and conflicts of interest. And this is particularly acute when you think of overseas actors and foreign entities attempting to engage in pay-to-play and influence peddling by using crypto and other digital assets. What I'm here today to advocate for is that as we have these really important discussions about digital innovation and other kinds of innovation, AI comes to mind, for example, we need to also be thinking about how to construct smart, reasonable guardrails to make sure that these potentially powerful technologies are not being used for ill gain or being used to otherwise undermine the U.S. policy-making process, which is ultimately supposed to be in the interest of the American public. I have specific ideas and recommendations on how to construct that strong ethics and anti-corruption regime, and I'd be happy to share them. But in the interest of keeping my remarks short here and really allowing us to get into the discussion, I will wrap my statement here.
Thank you for that. I'm going to set the table real quick, and then we're going to go to your demonstration. So I kind of see this, there's 4 different areas of impact. The first is individuals that are living in authoritarian countries, and they're suffering because the government is using the financial system to control their lives and reduce their freedom of movement, their freedom of choice. And so that's one group. The second group is individuals that that do not live in authoritarian countries, but have loved ones in authoritarian countries where they're trying to send money back, and there's limited ability to financially support family, and there's travel controls. And then obviously the next group is the government actually using the controls over those people. And then the last one is the global economy's interaction with all of that. And so, I mean, I guess first, the countries, I mean, there's all these different areas. Certain countries are actually being targeted by the global community as not being worthy of participating in the financial economy, and that's Russia. And post-2022, they've been on an island. And then obviously you have the countries that are banned from using SWIFT, and that's North Korea, Iran, Russia, Belarus. And so those are 2 different areas. And then lastly is just countries that have chosen to use financial control of their population as a means of control of their citizenry. And I mean, that's China, India, Iran, North Korea, Venezuela, Vietnam, Lebanon, Ethiopia. That's what the internet told me. Those are the countries that are, I guess, the most egregious. And there really is a ton of different ways you can do it. You can say you can't send certain amounts of money annually. India has a cap, China has a cap, Iran has a very low cap. So, I mean, this conversation is about individuals trying to circumvent all of these capital controls. And I was thinking, I was born in 1984, but I watched a lot of James Bond movies growing up. And back in the day, it was bearer bonds. We don't really do that anymore, but I mean, digital assets are the bearer bonds of the future. And so right now, about 1 billion people annually use either Bitcoin or Tether. Those are the top 2. And they basically circumvent all of the controls using traditional finance. And I mean, 1 billion out of 8, that's not bad. But obviously it's a major challenge. And the manner in which creativity has gotten into this. I mean, I have a friend that has a loved one in Moscow, and she has a guy that she gives money to, and then that guy has a relationship with another guy, and that guy gives money to her family. I mean, that's kind of crazy, but I mean, I guess it has trust, and it goes off the rails once, and you're never going to do it again, but that's the kind of things that people are doing. And if they don't do that, they got to go through Kazakhstan or have a secondary bank account. And so, I mean, this is a really serious challenge to hundreds of millions of people, but I guess I just want to talk about the way that we can further disrupt the ability of authoritarian governments to control their population using the financial networks. I mean, and that's the big question. I think there's an incredible opportunity because without capital controls and without information controls, which, I mean, the internet and Starlink and just the free flow of information that is getting increasingly difficult to control. I mean, those are the 2 things that I think will cause authoritarian governments to change the way that they approach this. And so with that, do the 4 of y'all generally agree with that framework? Does that make sense? Yep. Okay. Yeah. Well, great. Mr. Palmer, let's lead the way with your demonstration. Thank you.
Sounds good. Thank you. So I will broadcast it on the screen. I'm actually going to start a Google Meet. It will be behind us here, and it may be on the side screens as well. Perfect. But in order for me to share my screen, I had to set it up this way. So let me join here. The broadcast should show up. All right, so this is my screen. So again, I'm going to use an example of how this actually happens. So especially in countries like, let's take Venezuela, or let's say you're in, I'll use an example. Let's say you're in Venezuela, you want to buy some arepas.
Do you want my non-custodial account? I can give you my.
No, it's going to be, I'm purposefully using a demo account.
I got you. I got you. That was a joke.
And this is a non-custodial account as well. And you want to buy arepas in Venezuela or falafel in Turkey, so some of these countries where stablecoins are used quite often. And they will simply pull up their app. For me, it's biometrics. I have roughly $55 in this wallet. It's sort of broken down between a few different vaults. I'll open up the demo vault. So $16 here. There's $7 in a stablecoin at the very top. USDTB, this is an Athena Labs partnered stablecoin issued by Anchorage Digital Bank. It's worth exactly $7 because it's stable by definition. There's some Bitcoin in there as well, et cetera. So let's say I wanted to buy it. It's going to cost $2. So I would just go up to withdraw, choose the token. In this case, I want to use stablecoins because they're stable. That's what they're asking for. That's what is most accepted, although Bitcoin is sometimes accepted. All right, it says I have $7 there. I want to choose, what wallet to choose from. I only have one. I choose that. All right, how much? $2. Perfect. And I simply click continue. And now I have to figure out the address. So the typical way that this happens is you get a QR code. And they're all over the place. That will give their crypto address to be able to send the stablecoins. You click on the QR code on the right. That pulls up my camera. And I go down here and find a QR code. All right, so that pulled up the destination address. That's the vendor of the arepas or the falafel. And I click continue. I can add a comment if I want to and say, I'm buying arepas. All right, good deal. That's just an internal comment. That's the way this app works. Now I get to do a final review before I actually send them. And the nice thing about this is it goes all at once. But there's my comment. I'm going to withdraw $2 of USDTB. There's a certain fee to use the network because this is on the Ethereum network. And then it just gives me my from address, my to address. And at the very bottom, I can say submit and approve. Once that happens, it confirms my biometrics. I can go down here to look at the pending items, and it shows that it's sending right now. So it's in process. And what's interesting, some people say, it takes a little while. But the interesting thing is it all happens at once. When you do a credit card transaction, it looks like it happens really fast because it says approved. But that's just approved through the network, through the acquiring and issuing banks and that information. But it takes 1 to 3 days to actually settle. So that's why if you go to your credit card company, it will actually sort of indicate that it's pending.
And it charges you 3%.
That's right, and it charges you 3%.
How much did that transaction cost?
This one cost, I think it was something like 25 cents.
25 cents.
25 cents.
Okay.
And it depends on the network. There are some networks that are cheaper. Like Ethereum is actually built has a robust framework in order to build applications on top of it. Other networks are actually cheaper, which is why those networks are oftentimes used in those cases. So then it just shows it still looks like it's sending. But as soon as this happens, it will disappear, and then the funds are there. And then you get the arepas. You're good to go. They've already have their funds. They can see it immediately. The nice thing about public blockchains is it's right there. You can check it immediately. They'll be able to see that their funds have transferred immediately.
And let's talk about, obviously the U.S. financial system has been a little bit reluctant to adopt emerging technology. It's been slow, and we helped last year with Genius, and once we pass Clarity, it'll really create the regulatory framework that will allow all financial institutions, banks and credit unions, to fully adopt it. So I set up a non-custodial wallet, and my bank would absolutely never let me put money on it because they are worried about risks, and it's still new to them. But once we pass the regulatory framework, it's going to just spread like wildfire. Is that fair?
That is 100% fair. In fact, I think the best analogy is actually what happened with Genius. Once the Genius Act passed, it was sort of a historic unlock, right? And I think Clarity can be the next one. It really unlocks stablecoins. The issuance has really started. Once that happened, firms started to come into the United States, like Tether. They found Anchorage Digital to issue their token. Athena Labs came to us. So yeah, I think that's 100% fair. And I would say in the U.S., hasn't been as big of a need, right? In Venezuela and other places, they needed to adopt the dollar to control against inflation and authoritarian regimes.
That was one thing that I didn't talk about that I wanted to. A lot of the people that are using digital assets globally, they're doing it to shield their money from inflation, from governments' poor monetary policies. And they're doing it because they want their money to be worth what it was worth when they got it, as opposed to be at the whim of poor government policy. And I mean, I guess that's a huge part of Venezuela's adoption.
Because think about it. It has been years of mismanagement of our currency. So Venezuela, since the 1990s, we have had an inflation rate that is 2 digits, even 3 digits, and then hyperinflation. So people develop this skepticism, and they need to protect themselves because their lifetime savings were destroyed by bad management of a government. So the way I also see digital assets is a technology that constrains government, that creates competition for governments, and that way governments that wants to mismanage their currency also have competition because they know that people, they will protect themselves by acquiring Bitcoin or by acquiring stable coins.
So this is a little bit opposite direction. Let's take it from the other side. So governments do all of these things because they want to be able to tax and manage their domestic economy. So fast forward 50 years, what is tariffs are charged on, if I go to Paris and spend $10,000 on some fancy thing and I bring it back, I got to pay taxes on it. I got to pay tariffs on it. So if I do that with digital assets, the way that you just did that, there is a record, but government's ability to track it. What's the future hold for that? How are governments going to adapt to technology in that regard?
It's a great question. There are a lot of different ways that they'll do it. So I guess first and foremost, because this technology is so fast, secure, relatively cheap, and 24/7, it's going to take over. These rails are so much more efficient that they're going to take over. So governments are adapting. They simply just have to adapt to the new technologies. Honestly, a lot of it may actually happen below the level that we're paying attention. I'm showing what typically happens in authoritarian regimes because they're trying to get around. If you're in France, we may end up using MasterCard or Visa or Zelle or some other network, but they're actually using the rails, stablecoin rails underneath it, blockchain rails underneath it to power what they're doing. So in many economies, it will actually happen, without consumers even noticing.
So if I go to McDonald's right now and use my American Express, they're going to charge me DC sales tax.
Right.
And so let's just say McDonald's was going to accept stable coins. They also could charge me that same thing and retain and send and prove that it's on the public blockchain.
Exactly the same.
It just requires the government and the merchant and the individual to all adopt this new status quo.
And one of the benefits right now for merchants accepting stablecoins is that we're starting to see gas stations in the U.S. offer discounts for people to pay in cash instead of credit because they're saving 3%? On their credit card swipe fees. They're doing the same thing. I just used this example the other day. Regal Cinemas right now just started accepting USDC. They're offering 10% off on ticket sales and concessions if you pay with USDC versus a credit card or cash. So the benefit is hitting the consumers, hopefully over time, hit some of the prices.
So the $9 water that Regal Cinemas is going to sell me is going to be, $8.10.
$8.10.
That sounds like a great
deal. It's a big deal.
That's a great deal.
But on this note, in the US, for example, and in Europe, the rates of unbanked people is roughly 10%. But if you go to all over the world, people don't have bank accounts. If you go to Africa, most people don't have bank accounts, or if they have them, they are being not used the way Americans use their bank accounts. They are just used to cash in and to cash out, and then they use the cash. In Latin America, 70% of people, they work in this way. So the ability of governments of tracking transactions with cash, for example, is way less than you will have with digital assets. In countries like, for example, let's say in sub-Saharan Africa, most women don't even have an ID. As a result, they cannot have a bank account, 43% of women. And this is happening all over the world. So that's the biggest problem. The other issue is that we see an increase on people that are financially excluded, even in developed countries, because of the result of bad compliance rules. So if these people don't have this bank of last resort, which is digital assets, they really don't have anywhere to go. And if people don't have anywhere to go, this is when people are really vulnerable to criminal activities, criminal deals, the black economy, etc. So financial inclusion actually allows more the states to have better financial integrity.
So non-custodial account, self-custodial account, you could have unlimited money in it and take it anywhere you want to. I mean, at what point does a government say, when we say no more than $10,000 in cash, you can have on you when you get on the plane to go somewhere else, and that includes in your digital wallet? I mean, our country's going to try to do that? What can they do then? I mean,
Maybe a comparison is the best. If you think about the blockchain, one of the benefits of the blockchain is that it's public, right? You know, cash leaves no trail. Blockchains leave a permanent one, right? And so even in your self-custody wallet, that still is a permanent transaction. So you can't hide it forever, and that's actually what helps. You know, as the Bank Secrecy Act officer, I'm always trying to look for, illicit activity or suspicious activity. My biggest asset is the blockchain itself, so I can see what's going on and determine if there is money laundering or some other terrorist financing or other things going on. So that's the biggest benefit. Is it different? Yes. Our regime's going to have to, government's going to have to adapt to that. Absolutely. But we are leading the way. I mean, the United States and the innovation that's happening here is leading the way. We're actually seeing things happen. I think a good example is what happened yesterday or today when TRM Labs came out with their report on CoinEx. They were able to use blockchain analytics, looking at the public blockchains, to determine that CoinEx, which is a foreign exchange, was actually funneling money on behalf of Iran through Novitex, which is an Iranian exchange. And so that's the power of the blockchain, to actually find the illicit activity or even these other things. But that's the difference there.
Yes, because there is right now in the global financial system, in this Financial Action Task Force system, you have asymmetric compliance in the sense that everything that is recorded in democracies, in Europe and in the US, the compliance department, the anti-money laundering officials, they're able to access to that. But good luck trying to go into the financial architecture of companies in Iran, in Russia, in Venezuela. There is asymmetric compliance right now. If these authoritarian countries want to access the banking information of people in this room here, they're able to do so through the Financial Action Task Force system. But if you want to have the financial information of a company in Russia, Russia will not comply to the request of law enforcement agents from the US. So right now we are an extremely unequal system that is not preventing these countries from doing money laundering or terrorist financing.
Also on self-custody, I think I view it as a feature and not a loophole. I think one of the brilliant things about the blockchain is that if you actually want to use that money that is in your self-custodial wallet, you have to go through some off-ramp that is going to KYC you and put it back on the blockchain. You're going to have to send it to some exchange or some wallet where you can actually take that out and use it for something, use it for payments. So there still is a KYC mechanism there where governments can continue to track and have a good understanding of how much you have or what's going on.
yeah, Mr. Hitler got it.
All right, I think I got it out this time. One question I'd be curious to have my colleagues and you, Mr. Chairman, grapple with is, what do we do about the Binance problem? As I understand it, largest crypto exchange in the world, not monitoring for the kinds of activity that my friend at the end of the table there is tasked with monitoring in his outfit. And then we see recent Wall Street Journal reporting that Binance has been facilitating Iran's activities and funding itself, trying to evade sanctions. We also see Binance opening its headquarters in the UAE, who has its own history of using crypto to peddle influence here domestically. So I think a lot of this is going to rely on the relevant actors being good faith and complying and buying into the kind of the noble intentions of everyone here. But what do we do about those who aren't?
Well, first, I think if the U.S. economy is the center of the digital global economy, then there's going to be a very strong incentive to use our substantial rule of law and all of our different protections to the benefit of everyone else. And I think that the lack of a substantially developed rule of law in other countries is going to make it appealing at the outset, but long term it won't be appealing, because the reason that the U.S. economy is the greatest economy in the world is because of our system of checks and balances and consumer protections. But Mr. Palmer, what are your thoughts?
Yeah, no, I think it's a totally fair question. Look, a clear regulatory perimeter within the United States is a national asset. The wider it is, the better, because what that will do is it will bring that innovation back to the United States. And that's the important part. That's the historic unlock with Genius. That's why I'm looking forward to Clarity passing, because it will provide that clarity and sort of bring innovation here. Maybe the best example, even with Binance, is Binance came to the U.S. Many years ago with their BUSD, their stablecoin dollar. They were actually rejected at the time, and so they essentially kept it all offshore. In my view, that was a bad outcome. We want to bring them inside that regulatory perimeter, have that as wide as possible, because our greatest control is visibility, and if it's here in the United States, we have that visibility.
Any other follow-ups?
Just add that Binance also had to settle a $4 billion suit for money laundering, and its founder got convicted on those charges, although later pardoned. So, again, I'm struggling to see how we can square the circle here on some of this. I think you're absolutely right. Rule of law worked in that case, in my view, anyway. The bad guy doing the bad thing got busted, and now is overseas. So I take your point that having a more, structurally sound, sort of like clear regulatory framework may have prevented some of that, but I don't know that it would have prevented the malign intentions and actions of the founder there, CZ.
Well, I think that under the previous administration, there was a war on crypto. There was a war on digital assets, and it made regulation by enforcement the norm, and it was just there were no rules. And so that's why we're here trying to make sure that there are rules, and then we can enforce those rules. But obviously, without a developed legal framework, there's always going to be gray area, and people are always going to be trying to get by with whatever they can get by with. So the idea is that we're going to pass the rules and then enforce them, and hopefully this will be less of an issue. But I see your point. Yeah.
Yes, for example, the issue with anti-money laundering laws in general and the Financial Action Task Force system is this lack of clarity. Is this lack of clarity? Is this lack of cost-benefit analysis? Is this lack of simplicity? And is this wrong assumption that authoritarian countries will cooperate with the U.S. to tackle money laundering? This does not happen because most of the money laundering is in partnership with the states, sadly. And the reality is that the problem with the Financial Action Task Force architecture is that there is no cost-benefit analysis on what is working and what is not working. Point number one. Point number two, there is no penalties for countries that weaponize their financial system to repress people. There is no penalties for countries that do transnational financial repression against think tanks or against civil society members here in the US. So until you really fix these issues, the problem is that we will not be able to tackle real money laundering.
We also can't go after the tools. The tools are what is helping us create a more protective society. The reason we have seized over $1 billion in cryptocurrency from Iran this year. And some people see that and view as a headline as like, oh my God, Iran had $1 billion. But for the first time, we were able to go into their wallets and freeze their assets. Tether froze over, I think, $300 million. And what other technology can we go in and actually go into an Iranian wallet and freeze the money they have? You can't do that with cash. You can't do that with traditional financial services. The reason that we know North Korea has, let's say, $1 million here for their nuclear weapons proliferation through crypto is because we've been able to trace those funds on the blockchain. And law enforcement, working with blockchain analytic companies, public-private partnerships, more of the tools that we are trying to pass in the Clarity Act right now to give them, to strengthen them, more governments working together with the U.S. leading, that is good to stop bad actors. That will help protect against money laundering regimes.
For example, right now, Sadly, yesterday in my country, there was a huge tragedy. There was an earthquake. We never had this earthquake in our history. Thousands of people really were affected by these buildings collapsing. The United States is willing to help, and Secretary Rubio has already said that. We're extremely thankful for that. What I suggest is that we really need to leverage digital assets to do so, because we have two mechanisms. We either do it through the traditional financial system, where you have way less accountability, transparency measures. The money can go into Venezuela, and you don't know where it goes after that. But if you use digital assets, you're able to see that that money will be used with efficiency. It will reach people. So right now, we have these tools. 20 years ago, we didn't have it. 20 years ago in Venezuela, we had a huge, also, natural disaster. The US offered help. Actually, the Venezuelan government refused that help. But at the time, there was no these tools. Now we have them. So the State Department deploys all this support right now, using digital assets to understand the efficiency of how this money is being used. We can help thousands of Venezuelans today. This will not be possible if you use traditional banking system. I really think that that's why we really need to internalize and adopt digital assets, because it's not a matter of small transactions. It's a matter of that we can really change the architecture about the way our international economy is being built. All these countries and all these people will access financial tools that were not available before.
We had a hearing earlier today on SNAP and on making sure that people that get food stamps actually deserve food stamps, and confirming that they do not make more than a certain amount of money, all that. I mean, theoretically, in Venezuela, everybody that had a digital wallet could show their financial health, the amount of money in their digital wallet, and prove who they are using technology, and then we could give aid to people that really need it.
Yes.
Walk me through the pro-con analysis of that. I mean, one person could have multiple digital wallets, but you'd be able to prove through facial recognition. Like, what is that something that we can do, or is that in the future?
It's something we can absolutely do. I mean, that's exactly, again, back to my current role as a Bank Secrecy Act officer, think about it from a KYC or a Know Your Customer standpoint, right? There are a lot of good tools for people to be able to prove who they are, both from an identification and a verification standpoint, and then you can get the funds directly to that person or to that group. So we just use the tools that we're already using, that the world is already using under FATF and US guidelines.
Can you geofence a digital wallet?
You can. In fact, the digital wallet that I showed you is geofence. So it requires geographic location. We look at both geographic location and the IP address so that we know where they are.
In the evidence of that transaction on the blockchain, does it have GPS location of each device?
It's not on the blockchain itself. It's just
But it's stored in the device.
It's stored in the device in the application, right? That's in the self-custodial application itself. Yep.
I mean, theoretically, you could integrate a digital wallet with showing. The hearing earlier today, we were discussing how to confirm an individual's income eligibility for food stamps. And every state does it differently. It's very archaic. It needs to be modernized, and technology could use to make it much more efficient. But theoretically, you could take it to the next step and connect it to your bank, and then connect it to all other Cash App, Zelle, Venmo, and you could digitally prove who you are and that you actually are in need. And that's something we haven't talked about yet, but I mean, it's possible.
Yeah, it is 100% possible. In fact, some various technology is actually out there. For example, even a technology that was developed at Johns Hopkins and MIT, like zero-knowledge proof technology, can be used to prove people's identity and who they are and what they're doing without oversharing information. So there is, that's why I think it's so important that we have clear rules in the United States to keep that innovation here, so that we can maintain both privacy and efficient and effective transactions and get the money where it needs to be.
So
Yes.
once clarity's passed, do you think that my bank is going to allow me to directly deposit money into my self-custodial wallet, or is that something that's going to take time?
It will be bank dependent because we have the free market. So two things. It'll be bank dependent, so some banks will go faster than others. That being said, once there are clear rules, and because of the effectiveness and the efficiency of the blockchain, the fact that it's faster, cheaper, 24/7, I believe that most banks will move relatively quickly. The major issue that's been there for the last decade or so is just the lack of clarity. And it's like this legal gray area that is partially resolved with Genius Act and hopefully is more fully resolved with Clarity Act.
Yeah, we represent some bank members as well, and the amount of offerings that'll come out in a post-Clarity world are going to be enormous. I don't know if they'll allow you to move right into self-custody. I think they'll start with tokenized deposits and other blockchain-based offerings. But there have been studies that have come out. I think Deloitte said that they believe the tokenization market in the United States in a post-Clarity world by 2030 would hit $4 trillion. Citi said $5 trillion. It's at about 17 billion right now. So they're expecting massive growth. And we've seen it with the Genius Act. The Genius Act was the recipe for success that within we're a year now post-Genius, and the stablecoin market has gone up by 50%. It's over $300 billion.
And I've talked to a number of friends that try to get money back to their families in other countries that do not allow, that make it very difficult. Once we pass Clarity and once the U.S. financial system fully adopts digital assets, it's going to make it wildly easier to send money globally, circumventing capital controls of authoritarian governments. So it's literally going to exacerbate it'll make it way harder for them to control their population's finances.
And it's also a huge boon for Americans right now. That's one of the biggest costs. The remittance market is $900 billion across the world. The United States is the #1 sender of cross-border transactions, over $100 billion last year. Right now, the average cross-border transaction in the United States costs 6.5%. So every $100 I'm sending to my family in Venezuela, they're only getting $93.50. The international target is 3%. The United States has been doing it wrong, and it takes 3 to 5 days usually for that money to get there. With stable coins, I can send that money instantaneously, and it costs a fraction of the 6.5%. I can make sure that they're getting the full $100. And that money, that 6.5%, that's hitting me, the American, who's sending it. I'm putting in $100 and only $93.50 of my money is going to them. So it's a massive unlock for the American economy.
Yes, there is 3 layers here of complexity or improvement. The first one is this improvement of efficiency, this cost-benefit analysis, in which it can be on small transactions, remittances, but it's really happening throughout the global economy. The second one is the amount of nonprofits or businesses in the US that don't want to entertain or engage with counterparties in countries like Venezuela because of how inefficient it will be to do so. So by allowing these people to have greater compliance clarity, imagine the amount of foundations that will be able to now support people on the ground in Venezuela that right now they cannot do so. I know many foundations that lost their bank accounts here in the US because they were supporting people on the ground, let's say in Venezuela or let's say in Africa, etc. The compliance risk is too high, and now the idea is to simplify that compliance risk when you're doing so. And the third aspect is that, of course, you're empowering people in these places, because the reality is that in countries like mine, the government is not a benevolent actor. They don't want to see your transactions in order to see if you are doing some kind of tax evasion. What they want is to go against your political ideas. They want to weaponize the financial system. They want to monopolize markets. Just to give you an example, right now, the adoption of stablecoins and Bitcoin in Venezuela is roughly 60%. But it would be 90% if the government allowed it to do so. Despite the fact that they saw the amount of people who is benefiting from this technology, they continue blocking it because they know that they're losing their spots for corruption of doing so. So the mentality of all these governments is just to take as much as possible from society. And the fact that the US has this technology is really protecting people in all these places.
Just as a further example, right, this is happening right now. Western Union came to Anchorage Digital Bank. We're now issuing, on behalf of Western Union, their stablecoin so that they can use it for remittances. So this is already starting to happen because of the clarity, pun intended, coming out of the Genius Act, and we hope that that gets extended to all digital assets. But it is happening right now, exactly what Cody was talking about.
Yeah, and pardon my language, but the authoritarian regimes are scared shitless of this. I mean, 98% of stable coins right now in circulation are US dollar backed. The people in Venezuela, the people in Argentina who have hyperinflation or their currencies debased, they are desperate for access to the dollar, and there's nowhere else to get it except US dollar backed stablecoins. It is the best national security, economic security tool that the United States government has to make sure that the dollar remains the world reserve currency, especially as the BRICS coalition, China is pushing their digital yuan into Africa and to other nations. Having the strength of the dollar be in the access of millions of people around the billions of people around the world is such a massive unlock as we move to a digital economy.
Well, we're about out of time. Any final thoughts? I think this has been a great conversation. I appreciate everybody.
Thank you very much. Appreciate it.
Thank you.
Thank you. Thank you
Hey,
very
thank
much.
y'all so much. This was great.
Thank you.